Good morning to you. On Wall Street, U.S. stocks rose Tuesday following Monday's tech-driven sell-off, while supply and demand friction pushed energy prices to multi-year highs. The shaky state of the stock market over the past month has a lot of people wondering, what is next? What am I going to do? Here to help us break it all down is Kristin Myers, editor-in-chief of The Balance. Hello, Kristin. Good morning to you. Thanks for being with us.
Of course.
The stock market fluctuation, it's definitely on the minds of a lot of Americans. Will the U.S. government potentially default on its debt? And again, nobody knows the answer to that question, but should that happen, how could that affect all of us?
You know, that is really right now, Adrian, the multi-million-dollar question that is going on, not just for markets, but also for the U.S. economy and also to an extent, the greater global economy. So will the U.S. default on its debt? As you just mentioned, there's really no one that can truly answer that question right now. But should the U.S. default on its debt, it will be absolutely catastrophic, not just here at home, but again, also globally. It's why you have Treasury Secretary Janet Yellen essentially going out and continuously raising the alarm about that debt ceiling. And at least when it comes to the markets, we are definitely going to see markets react negatively to that news. Markets typically like uncertainty. They do well in periods of uncertainty. No one needs to look any further back than the pandemic to see how well the market has performed during this period of economic uncertainty. But this is not the kind of economic uncertainty, Adrian, that the market would like. And it is going to impact everyone, whether you're receiving a Social Security benefit or perhaps a small business loan or some type of benefit. If you are a veteran, you are going to be impacted if the U.S. defaults on its debt.
We've heard this word thrown around, $1 trillion coin. We're getting these reports that this could solve the debt drama. What is it, and is it real, or is it more of an analogy?
I don't think anyone truly thinks that it is absolutely real, that, that the United States is just going to start printing a very large sum of money in just one coin to solve all of our money issues. It is a little bit something silly that folks have thrown out. There are a lot more bigger economic issues that we have at play in terms of whether we're going to raise the debt ceiling. By how much are we going to raise the debt ceiling? Are we going to keep the debt ceiling going forward? Because we've seen it continue to be this sort of political hot potato right now between Republicans and Democrats, which are facing some other issues, at least on infrastructure, those social spending bills. And the debt ceiling, it seems, typically should not be held hostage in this type of situation. We see it right now being this sort of political pawn between Democrats and Republicans who have become increasingly divisive, increasingly partisan over the last couple of years, that we're actually now at this point of political brinkmanship where our economy is actually really at stake here. This is an unfathomable scenario. This is not a scenario that we've ever really truly faced before. And so I think that really, it kind of shows just how high the stakes right now really are.
I think there are a lot of investors who love high stakes, who are going to have a lot of fun riding this ride, considering some of the issues that you brought up. The market's responding to a lot of things happening in Washington. Thank you, Kristin, for your insight. Hope to see you soon.
Of course.